people get so confused. They don't know what to buy. They don't know what to do. They don't know. They're looking for certainty. I like the confusion. I like the problem.
Not a lot of people have $700,000, right, to buy that first property.
But anybody can set up a real estate syndication or real estate fund, and they group investors together. I mean, who wouldn't want to own a McDonald's?
You're the largest commercial owner of properties in Old San Juan, Puerto Rico.
Yes,
how'd that come to be?
So when I did the first and second deal and I saw the potential and I saw the banks reacting to me pretty well, I started making a killing. I mean, I took buildings that were empty, no tenant downstairs, brought in tenants paying $20,000 a month. Just, you do the math. I mean, we're talking millions upon millions upon millions, and with zero competition.
Hi, and welcome to Common Denominator, a podcast about growth, mindset, and entrepreneurship. I'm Moshe Popak, and today we chat about commercial real estate with Cherif Medawar. Cherif is recognized as the nation's top commercial real estate mentor, author, and fund manager. He is the CEO and founder of Medawar International Group Secured Income Fund and Secured Fixed Income Fund, managing assets worth over $100 million. His diverse portfolio includes investments in various property types, and he's the largest holder of historic properties in Old San Juan, Puerto Rico. We just had an amazing time discussing all things commercial real estate, and I'm excited for you guys to hear it. Hi, Cherif, and welcome to Common Denominator.
Thank you for having me.
So we both work in the same space. We both work in real estate, and there's different schools of thought on I guess, high-level, macro perspective of real estate. What would you say is, giving advice, again, to the audience, what would you say is your high-level philosophy when it comes to investing in real estate?
So I work based on formulas. So I don't have to recreate the wheel, and I don't have to try to think under pressure or when time is very tight. So my formula is very simple. I look at 6 things. Number 1 is the safety of the assets. That has to do with location, the type of asset, etc. Number 2, I look for solvency, meaning the cash flow of the asset, or is going to be the cash out. Number 3, I look for liquidity. Can I borrow against it? Can I sell it fast? Can I carry financing against it without problems? Number 4, I look for actual cash reserves. I always have to have cash reserves, whether by having a second kind of line of credit against the property or having certain money sitting with the lender or certain money sitting with the bank. And then number 5 is diversification. I like to have different type of assets in different location with different style of investing. And then number 6, I have to have a plan B, a plan C, a plan D, as many backup plans as I can, because there are a lot of surprises and ups and downs in these markets.
So I really love that. I resonate with very much with 4 of, and we'll go. I think we should go through each one of them, because I think listeners starting out. First of all, it's a high barrier to entry to invest in real estate. Super important when I think about cash flow. What are the things that you look for? In other words, you're looking to buy a property. How do I analyze what the free cash flow is going to be? Like, how do I, in other words, you get this broker package, and they're like, oh, it's going to look this way. How do I go about analyzing what the cash flow is going to be?
So always real estate looks good on paper. So some broker presents something to me, it's going to look wonderful. Some syndicator raising capital for an apartment building is going to make the numbers look amazing. So I don't really look at what they present. I just go and I say, well, give me the numbers. So let's talk about specific type of asset I like single-tenant retail. Those are the standalone buildings that have a Starbucks, a Jack in the Box, etc. Believe it or not, I like them vacant. I like these buildings vacant because all I have to look for is what the potential is to rent this property. How much will it bring? So a property sitting vacant, maybe at $800,000, I can tell the seller or the broker, listen, it's sitting vacant. You're hoping for a big tenant to come in. I need to buy it from you. The 800 is not realistic based on what I'm going to collect in rent, what I have to fix in the building, etc. So it's property location in that market and property condition that I have to do to get it to its highest and best use. And if they tell me, okay, I'll go to 700,000. So now I'll lock it under contract for 700,000 based on a 45-day contract and 15 days to close. I close all cash. I do the deal cash, then I go get a loan. And what I do is I look at the comparable rents in the area based on per square foot rent. And I see that, let's say, a Starbucks down the road is paying X and Jack in the Box down the road is paying Y. And I start smiling and dialing, calling the big tenants to come in and take the place. And I quote them, let's say, $8,300 a month. All I need is one tenant to call me back, national tenants. And they will come in. These guys come in for a 10-year to 15-year lease. They're going to tell me we're going to sign triple net. That means it's net of tax, insurance, and maintenance. Very easy to figure out what the insurance is going to be. You call an insurance broker. Property tax, the broker will tell you to selling the property. And now I have a property that's going to make $100,000 a year, or $80,000 a year, or $70,000 a year. Whatever it's going to make, the formula is that amount times 16 will be the value of the property. It's a very simple formula. 6% cap. Why? It comes with a corporate guarantee, triple net, etc. So I can take a property at $700,000 under contract. I only buy it if a large tenant is going to commit to buying it. And I know how to package them, how to present them, how to talk to the tenants, how to promote them. And if I can't find a tenant, I just walk away with no risk. So that's the essence of the cash flow. People get so confused. They don't know what to buy. They don't know what to do. They don't know. They're looking for certainty. I like the confusion. I like the problem. I'm buying from a person who wants to sell because there is no cash flow. So they have a cash flow problem. I'm going to have a cash flow solution with a big national tenant, publicly traded, like a Subway or somebody coming in, that's going to give me a corporate guarantee. I guarantee you I'll pay you $80,000 a year or $100,000 a year. So easy to calculate the numbers. Now compare that to somebody trying to figure out an apartment building. Good luck. Good luck. So that's what I do. It's simpler formula.
And you're able to, where the existing owner was not able to get a large tenant, you're able to do that.
Yes, it's a very niche market. In commercial real estate, a lot of owners don't know much. They bought through a broker, they rent through a broker, they sell through a broker. They don't have training. They just had some money in something and they put it in. So it's actually a wide open field. Up to just maybe a decade and a half ago, there wasn't even a multiple listing service. It was LoopNet and whatever other sites you can find. And it's a good old boys club. Even people that are from residential trying to get into commercial brokering, they have a hard time. Female trying to get into that world have a hard time. It's an incredible opportunity that will probably continue for the next 50 years.
And I think, even to buy your first property, tremendous high barrier to entry. Even like you're saying, not a lot of people have $700,000, right, to buy that first property, right? You gotta, right? I mean, anybody. Sorry to interrupt. I get so excited. But anybody can set up a real estate syndication or real estate fund, and they group investors together. I mean, who wouldn't want to own a McDonald's? Okay, get 20 people want to own a McDonald's. Each one of them will put $25,000 or $50,000. You got yourself $1 million to $2 million. You can put it purchase a property all cash. McDonald's comes in, the property is a time and a half what you paid. Everybody benefits. And now you're the guru who set it up, but you only had $25,000 to begin with. So that value, right? So that value of syndication, that to you is normalized.
Totally.
If we can break that down for the audience, because I think that there's tremendous value in figuring out how to do from beginning to the end. Like, in other words, being able to make a decision. I'm going to buy this property. I'm going to tie it up into due diligence. Then I'm going to have syndication documents, and I'm going to go to friends and family or whoever it is, right, to go ahead and syndicate a deal. So what does that look like if I'm a beginner? If I'm starting and I want to do this, first of all, I don't have track record, right? So how could someone do that if they're just starting out?
So the key to success is you got to have some knowledge, take action, and network. So let's talk about the network, because the network is the shortcut. It's a shortcut that you can duplicate. So what I've done is I created trainings for people because I realized they can't go through what I've gone through to make it happen. It involves luck, it involves a lot of tenacity and all this. So I say to people, for example, go learn or come and learn how to find a single tenant building in the right location with the right neighboring tenants. And now how do you gain the credibility to make an offer to a broker and say, hey, you're listing this single tenant building with good traffic in front of it. I'd like to make you an offer. The commercial broker is going to say, well, who are you? Do you have an actual proof of fund? We don't, because in commercial real estate, there's no pre-approval letter or pre-qualification letter. They're going to laugh at the buyer. But there is a the proof of fund letter. So what I've done is I trained people and I have my fund. We have millions always sitting because we have cash reserve. So we tell those who I trained, I work partnerships with them called joint venture. They identify in their market the single tenant property. I give them the proof of fund letter. So they say, I'm making the offer on behalf of this real estate fund owned by Cherif Medawar. And they can Google it and they can see and they can go to the website. They see we're filed with the SEC. And here is $1 million sitting. We're making an offer at 700. We can close all cash. So to your point, a new person, if they have the knowledge and they know me now, or they know somebody else, they can do this maybe with a partner or something. They know now which properties to look for. They know how to talk to a broker. They have proof of fund to get taken seriously. And now they can lock in the deal under contract. And then I give them a list of national tenants, over 4,200 national tenants that are constantly seeking to expand. For example, the biggest line of tenants that expand right now are what's called QSRs, quick service restaurants. They constantly want to expand. Their business model is based on expansion. They have even done well through COVID. They were the fastest to grow. So once they actually get one tenant interested, we sign a letter of intent. I go on a call with them. We negotiate the lease. And when a letter of intent, Subway is interested in leasing so long. And we're doing now a deal with Fat Tuesdays. Fat Tuesdays, it's a huge corporate guarantee, over $100 million. I mean, you should just, it's an amazing deal. So the property, I got that property for $700,000. Property is going to be worth $1.3 million as soon as we're done with this. The pieces are done. I mean, literally the money is going to be wired tomorrow for the deposit and everything. So a deal like this is put together in pieces because once you have the strategy, you got to have the structure. And a person who's done it once, by the way, once they line up the tenant and we negotiate the letter of intent, the property value jumps. We haven't purchased it yet, still under contract. They assign the deal to me, to my fund. So I pay them on that upside, which is a very clear upside that we work out from the 700 to $1.3 million. That person gets 10% of the upside, gets $50,000. They had no risk. They put maybe $5,000 in escrow, showing my proof of fund that they work with me. They smile and dial, and all they need is one tenant to say, yes, we're interested. So if there are no tenants, call them back. And the time runs out. We're 44 days into it. 45th day is the end of the due diligence. They just send an email to the broker and say, it's not meeting our criteria. We're not able to move forward. They get their $5,000 earnest money deposit back. So there is no downside for a newbie, huge upside. And when the upside happens, it happens because we lined up the tenant. I'm going to close. I'm going to wire the money all cash. That cash is coming from my investors. And I have $8 million in my own fund, and then the upside, they get paid $50,000. Guess what? The second deal, they do it for themselves because they come, they set up a real estate fund. They can show their investors, hey, I know how to put these deals together. Let's make money. And sometimes we do partnerships going forward. And that's one type of assets that we do.
Right. I love that, a lot of people say, how can I find the money? In the end, if you have a clarity with being able to make money, like you're saying, in other words, being able to make money, the investors will come 100%. Right? You've shown it. You've shown the track record. And you explained that. But the other concept, another point you were saying about cash reserves. Why are cash reserves so important when you're owning real estate? Because a lot of people want to take every single penny. Once they get into the real estate game, they're like, oh, let me spend. They just keep buying properties. and let me not have these reserves. Why are reserves so important?
Reserves help you in two ways. If the market goes down, you're able to sustain, recover. Let's say in a residential home, you can maybe add a master bedroom, make it more appealing. If it's a commercial building, maybe you can promote it better. Maybe you can sustain with negative cash flow for a period of time till you adjust and have a plan B. Residential not working, you do nightly stays with Airbnb or something. So, and then it also helps you when the market is good and you want to jump on some opportunities, you have the cash reserves, you can grab something great.
Yeah, I find that for some reason or another, there's always need, any year, even on a good economy or a bad economy, the elevator could break. Let's just talk about multifamily. The elevator, the roof, something could always seems to go wrong, or you need to renovate the apartments because the market's good and you'll be able to get even higher rents, right? If you renovate the apartments, that's another.
Yes.
And then the point of diversification. Why do you feel diversification is so important?
Because markets are different throughout the United States. So, for example, in my real estate fund, we are diversified in three ways. By market, so we do San Francisco, we do next to Sarasota, Florida, and we do Old San Juan, Puerto Rico. So by location. We are diversified by type of assets. We do luxury homes in San Francisco. We do ground-up development, cookie-cutter residential homes in Florida. And we do mixed-use commercial in Old San Juan, Puerto Rico. We're also then diversified by style of investing. In San Francisco, we just take these homes and rehab them to make them look incredibly nice. These are $3 to $5 million homes. We put $2 to $3 million. We sell them at 10. We have a couple that are going to come on the market, $25 million each. These are on Billionaires Row, Broadway Street and Vallejo Street. In Florida, we do those cookie-cutter residential homes, 3-bedroom, 2-bathroom, 1,600 to 1,900 square feet. And we ground up development to sell them. In Puerto Rico, we take the mixed-use commercial that are downstairs retail, upstairs either residential or office, and we reposition them to cash flow. So the diversification by location, type of asset, and style of investing, where we flip some, we sell other, pre-sell them with the development and the other cash flow, this gives us the sustainability to be able to continue. Because if, again, to the formula, if you have a strategy and you have the structure, all you need is a system to do it and then automate it. Automate it meaning step back to have the team, the tools, the technology, and all that work for you so you can then scale it and sustain it. So I can pass it on to my kids and benefit the area and benefit the investors, etc. So it's a strategy, structure, system, automation, scale, and sustainability. And that's how it goes.
Yeah, everything. I'm constantly thinking about systems, how to optimize systems, and then figure out problems. And because there's always stuff within the real estate spectrum of things that you're dealing with. And then once you figure it out, that's the way the company's going to be running, like that. That's the solution. Yeah. What would you say now? We're in a funny time in the real estate space because interest rates are up. But what would you say for you do you see for the next year or two the greatest area of real estate with the greatest opportunity, upside?
So I'm always optimistic. So I just focus on the opportunities in commercial real estate for upside. Like the example I gave you, I like hotels because you can get them at better cap rate and you buy them with a team. And if the team is not good, you can get a professional management company to run them like a Hilton or companies that run under the Hilton guidelines or the Marriott guidelines. So it's so much easier to make money with assets like this because the goal is to free myself, not to tie myself up to daily problems or daily operations, etc. So the opportunities are all around us. If you tell me right now, market is very hot, beautiful, I'm going to sell some properties. Market is slow, I'm going to be buying some properties. But then is that in general? Well, it depends on the market. It's so specific to a particular market.
Yeah, it's. I was told this. There's more real estate than there is cash, right? value-wise, right? So there's always going to be opportunities. There's always situations. Someone can be, at least that's what I found. You know, during the 2008 crash, you know, you go to many special asset divisions of banks, and they're not in the business of owning property. They're in the business of lending and collecting interest. So you, like you're saying, build that network, and all of a sudden you have 2 deals from Bank of America, a couple deals from, you know, from Regions Bank, you know, it all, and like you say, you do what you say, right? You know, you wire the money right away.
Yes, but also a lot of people are just focused on getting a good deal instead of looking at the deal's upside. And that works. You see, like, let's divide the world of real estate into residential and commercial. Residential real estate, you gotta do 3 steps. You gotta focus on the market, focus on a specific type, let's say 3-bedroom, 2-bathroom, 4-bedroom, 2-bathroom, whatever, and then understand the values. So when you know this area is selling at 500,000, for example, and then you can find something at 400,000, you go from being afraid to move forward to being excited about getting it at 400, because you know you can either rent it, it's going to cash flow, or you can flip it at 480 and you're going to get out quick and you're going to make some money and just have to avoid taxes, reduce taxes, etc. So in residential, you're constantly trying to find a deal below market. And as the market goes up, flat, down, you're trying to buy below and sell at, buy below, sell creatively, etc. When it comes to commercial, I pay full price. Sometimes I even overpaid on some properties in the past. But the upside was so huge. I bought them from a broker, listed at the asking price, bid against some others. And when I got it, I changed the layout. I split the space, put 2 big tenant jewelers downstairs, took the upstairs, made one section as a medical office, the other section residential. The doctor who leased here, leased across, made it a cash cow, and then refinanced and cashed out. I did it before where the bank said, no, I'm not going to refinance for another year. Refinance with us, we don't charge you the prepayment. So you just don't always have to find this desperate seller. You can just find an opportunity in commercial. But in commercial, you make a good deal. In residential, you find a good deal.
I love that, the idea that you're seeing, eventually you begin to see things that other people don't see. I remember when I was a young kid in Long Island, and there was a few owners of this kind of strip center or this mall, and exactly to your point, his young guy came in, he did a syndication, and I always admired this. Just was like a bankrupt type of mall, and he was able to put it together. Some medical office, exactly. It's the same thing, jewelry, clothing, and all of a sudden he's got all these tenants and he's got all this rents coming in, and I became friendly with him, and that's when I was just starting out, and that was amazing because it was 3 different owners before him, and he bought it for pennies on the dollar. And I remember that. I was like, wow, that was really cool. And that put me on to the ideas. You got to think out of the box, see stuff that other people don't see. Don't ask why someone's selling or why. If it works for you.
Exactly. It doesn't matter.
It doesn't matter. Then you do it. If it works for you, if you're plan A, B, C, right, D, all those, there's always a pivot and a way to work out. One thing I was also fascinated is you're the largest commercial owner of properties in Old San Juan, Puerto Rico. How'd that come to be? Did you grow up in Old San Juan or?
No. Actually, I went to Puerto Rico. I was doing some project for Hilton Hotels because I was the troubleshooter for Hilton Hotels 29 years ago, because anytime they were going to lose a management contract, they would send me to troubleshoot and work with the ownership, because I understood the hotel business and the real estate assets. So I would go to the owners and create was the liaison, if you will, between the owners and the management company. So they sent me to Puerto Rico. They were going to lose a deal, management contract on a hotel and casino in a place called Isla Verde next to the airport, at Embassy Suites Hotel and Casino. And I discovered Old San Juan, that they told me, here's where the cruise ships arrive. These historic buildings are the oldest historic buildings, the oldest historic zone under US flag. And there are a lot of tax benefits. Now, believe it or not, Moshe, none of the people I asked at that time, this is back in, 99 or something. None of them knew what are the tax incentives. I said, what tax incentives? I don't know. I heard there are tax incentives. So I realized this is a gold mine. First of all, it's isolated from the entire United States market. It is the third largest port. So frankly, I went back to California after I finished the project for Hilton. I had left Hilton because I was making so much money in real estate. But the problem became in 2002, 2003 that I was paying so much in taxes. And I said, California, between federal and state, when you flip a property, it's 53.8% tax. I said, well, there has to be a legal way to reduce taxes better than what I'm doing. And in talking to tax attorneys and strategists, everybody's telling me, go Cayman Island, Bahamas. I'm like, I don't go outside the United States. I am working within the U.S. Why would I go outside? I can even control my ownership of a property outside the country. And I don't have to study the world. So then I went by myself to Puerto Rico and I started asking, and then I fell in love with the property because I saw the traffic from the cruise ship. Like, we're talking thousands of people walking by these buildings, credit card in hand, trying to shop, and there isn't enough shopping. So I bought the first building and I found out I don't have to pay property taxes. It's kind of reduced to a symbolic amount if you maintain the facade of the property and the inside of the property according to its original historic design. So I thought, that's pretty fun. How great is that? I can help the area, I can improve these places, and I bring big tenants. I started smiling and dialing, and I brought Tommy Hilfiger, Burberry, Coach, Sunglass Hut. I mean, it's been a bonanza. I mean, we took buildings that the buildings weren't cheap to begin with. Like, buildings were $2 million to $5 million. It was very expensive because it's an island and they're not dumb over there. They know this is a historic zone. So, but then I took them and I improved them. So when I did the first and second deal and I saw the potential and I saw the banks reacting to me pretty well, this is 2004, 5, 6. I started making a killing. I mean, I took buildings that were empty, no tenant downstairs, brought in tenants paying $20,000 a month. Just, you do the math. I mean, we're talking millions upon millions upon millions, and with zero competition and tax incentives. So I took residence there right away in 2005, and it's been my headquarters. Practically all my business is routed through Puerto Rico because that's where I have my team, that's where I have my presence. And then in 2012, they created true tax incentives to help the island because economically it wasn't doing well. And it's been a bonanza. I mean, we have most billionaires moving there, especially from the Northeast. You know, we chatted previously about that. And it continues to be an incredible place to invest. It's not easy. It's got a lot of challenges. But then what is easy? Nothing is easy. I'm doing rehab in San Francisco. The permitting took a year. I mean, what, do they not want me to remodel a $10 million property? I'm putting $8 million. They're giving me a hard time. You know, but that's...
No, but I love that. I love that point. That's super important, right? If you want to be an entrepreneur, you have to know that every day, you're solving problems. It's not going to be easy. It's right. That's the story. And I think of also everybody that I speak to, business successful entrepreneurs, they found something, right? Something that bothered you, right? This 53.5% tax that you're paying in California. You're like, what the hell is this? What am I doing? So, and then you go to Puerto Rico, and Puerto Rico's super interesting because it's super unique, right? So if your business is fungible, let's say you're in finance, you can go. I have friends that moved to Puerto Rico. I was saying Dorado Beach. There's a Ritz-Carlton there. It's beautiful. You're on the beach, and I think it's federal. So I don't think there's any state tax or Puerto Rico tax, and then the federal tax on income, it's like 4%.
Yeah, there are some special tax incentives. You have to comply with quite a few things to get to the 4%. Yeah, it will cost you maybe 10 to 14, but I mean, it's so much less. I mean, if you're saving 30 to 40% on your taxes, what are you going to do? You're going to shorten your life, financial life, and your headaches and all this. And then when you invest that money, it compounds. So if you had 20-year plan, you find out I can do it in 10. Wait a minute, if I invest the money, I can do it in 6. Right. This is like
compounding. Real estate allows for that compounding ability. And again, right, you can also, right, if you don't flip, right, you have depreciation, which on your tax returns offsets, right, offsets
Yes.
all that cash flow, and then
Yes,
the
yes.
compounding effect of that. But this was something interesting because my almost 18-year-old and 16-year-old, my two boys, are in the vending machine business, and
Yeah.
right, and I know you like the vending machine business. I'm just curious from your perspective. Why do you like that? Because I love it. I'm just curious why you
Yes,
why
I
you
like
it.
ancillary income, additional income. So we have like a small hotel, for example, 14 rooms in Old San Juan on South Fortaleza, called Fortaleza Suites. I bought it, I improved it. It makes like 70-some thousand per month. And I said, it's great. Well, how can I increase the income a little bit? Because I don't like to cut expenses as much as increase income. That's just my mentality. I put a couple vending machines. These things are making a killing. It's
Right?
unbelievable. So I originally put them and I told the staff, you guys maintain this, I'll give you 50% of the net. When you open it, you get this number, submit this to my accounting department. So the staff is happy. They're constantly getting these sodas and all this. They have sandwiches, candies and stuff. Two machines. And now they're even putting a sign outside for people from the walking the streets because there's constantly cruise ship passengers, local. This #1 visited area on the island. So it's making extra income. We put antenna on the roof. It shoots signals on the on the street and you get that extra income. So I love extra income that you weren't counting for because it comes to the bottom line, increase the value of the property. But vending machines, pretty simple business. You can actually literally call around, set up like when somebody's starting and they need some cash flow, they can call around hotels and whatever and say, listen, I'll put the machines for free, give you 50%. And you can get the machine leased from Coca-Cola or Pepsi, etc. And then you build enough, let's say 3-4 hotels, and you can sell that for a multiplier, get some cash, and then start doing things.
Yeah, I find that my son was able to locate in China. Typically, it would be like 5,000-6,000 for like the machines, but he bought it in bulk, and I think he was all in like $2,000 landed in Miami for really good machines with credit card reading and everything. I was like, oh wow, it's pretty good. And now his thing is, he found locations, hospitals, schools, for most of his machines, but I'm finding that that's the solving that he needs to do is how to get the best locations. You know, we're in Miami, so that's the and I want him to grow up, both of my boys, to go through that process of finding locations. I want them to do it themselves.
Yes, I like businesses like this produce cash flow. You know that Warren Buffett was in the vending machine business.
I didn't know that actually. I didn't know that.
You can Google it. You see, he started in that. It's pretty interesting. I actually, at one point, I did some vending machines just for fun. That was a while back, like many years ago. And then I did also video games. Video games even better at the time. Now you can compete with Xbox and all this stuff. But video games, because you put the machine, you don't have to replenish it. You just go collect the money.
So good.
So it was amazing. But then that was so long ago, we got out of it before the Xbox came in,
And then I saw also the one of the most successful is laundromats, right? Laundromats, you could put it in buildings. Laundromats also, where the people are just doing. I mean, you have to service them, but it's super fascinating. I know you have also. Tell us a little bit about your mentorship program.
I've been in the education business 25 years. Like, if you ask me what business do you like, I like educating people. I try to give people what I was looking for someone to give me. I was very lucky to be at the right place at the right time. I was working at the Century Plaza Hotel in Los Angeles. This is 1980, we're talking. And a billionaire in the name of Edmond Bessari came in. And he said, listen, Cherif, I've been watching you working here and you're always a kind man. I'll show you his picture because this is not Rich Dad, Poor Dad. This is a real guy here. This is Edmond Bessari. I was here. I was 26, I think, here, 25 when I was working for him. This is in front of his chateau.
Nice, young, handsome man. I like that. There you go.
Oh, thank you, sir. Thank you. And he owned actually castles in France. So this was his main residence, the Chateau de Madame de Pompadour, which is the Louis XIV mistress. I mean, the chateau is worth a lot of money. But the thing is, he said, listen, I see you so energetic. You're working around the clock. What are you trying to do? And I said, listen, I want to become a general manager. I'm only 20 years old. And he said, listen, come and work for me. I got properties around the world. I need somebody to speak on my behalf, handle stuff. I got scared. I didn't get excited. I said, well, I don't know anything about real estate. And he said, look, listen to me. If you can say what I need you to say, you can do what I need you to do with your energy and enthusiasm and your ability to learn, we're going to make it happen. If you can't grasp it and can't make it happen, then you lost your job. You lost your opportunity. Well, within a couple of years, I was his right-hand man. We started doing unbelievable deals around the world, France, the Caribbean islands, etc. And there was a lot of tax incentives that I learned from him and formulas. And he was a man of formulas. I mean, Harvard called him the man with two brains. He was based in Monaco. Monaco is the Principality of Monaco with tax exemption. Anyway, so I learned a lot how important it is to reduce expenses, do the right deals, having the right strategies, and most importantly, the right structures. So fast forward to many years later when I started making my own millions, he called me and he said, listen, Cherif, I've helped you. I want you to go and help 10 other people. Pay it forward. And that's really what excited me about, you know what, let me start sharing this with others. And I started training people. This is back 25 years ago. Actually, January 6, 1998 was the first time I did an official training. And it just went so big to my friends in the hotel business. Then they started inviting people and started getting bigger. And I realized what areas in the business I didn't know. Because if somebody asks me a question and I don't know it, I owe them the right answer. And within a year to 2 years, I became an expert. I wrote a book called I wrote one called Conquer Wall Street, but I wrote another one which is Blue Ocean Opportunities in Commercial Real Estate. It's on Amazon for like $1.99. I guess that's the cheapest I could sell it. It's really to help others. I figured if I can help others, what a great blessing it's going to be. I can send money, pay through a church, but to give my time and knowledge, I can transform lives. And the more success stories I got, the more exciting it got. And then in 2008, when the economy was collapsing, I was doing a training in San Mateo Marriott next to San Francisco Airport, because I have a home in Santa Clara. And this gentleman raised his hand and he said, Cherif, I've been watching you for years. I love your trainings. You're fun. You make jokes. You make it clear. But if I try to do this and fail, I'm going to get a divorce. I was embarrassed. I said, what am I going to do? I have 100 people looking at me. I said, okay, so what's your question? He said, can I just give you my money and you do it? So I said to the audience, how many people want to just give me the money instead of go through the training? To my surprise, the whole audience raised their hands.
Wow.
I said, write down how much you would give me if I set up a fund. We had 5.8 million in the room.
Wow.
You know, when you think you're so smart and then 2 years later you look back, it's like, oh my God, I was doing all this wrong. So the training programs that I train people now. I have like a couple good programs going. One called the joint venture. I train people to identify single family buildings. I give them a training in details, intensive day on how to talk to the broker, how to use my proof of funds with millions of dollars to get these properties under contract, and then how to use my tenant list, how to identify the location, who they want to be next to, and all this, all organized. And when a tenant responds, how they can get with me. I'm the one doing the training. I'm the one talking with them to the tenants on Zoom and locking them in. And we're doing a deal right now with McDonald's, where McDonald's, instead of leasing, they want to buy the building from us. We're going to even make more money. It's unbelievable. And it's through a student who's doing wholesaling of residential. And he said, my God, I can do wholesale of commercial through you and make like 10 times more on a transaction. Like, if you can put the pieces together, let's do it. He came to a training one day. It's changing his entire positioning on life. So we do that training. It's called the JV partnership. Then we do another training for those who have done it a few times or are good and up and running in real estate. And I say, like to you, I say, Moshe, you want to set up a real estate fund? Now it's better than a syndication, because if you set up a syndication, you're just going to set up an asset. You're going to get this apartment building, raise money for it. That's a syndication. A fund, you can set up something that keeps on going. It's not just one deal at a time. You can put mortgages, tax liens, tax deeds, residential rehab, residential development, commercial, 12 different types. And now you have a fund, like a mutual fund. And people can come in and can come out, and I show you exactly how we do it. I give the people the training. I have attorneys working with me. They're literally in my office. I have in-house attorneys, and we set up the people, and everything is done less than an attorney would charge them just to do their paperwork for the private placement memorandum. And we do it, and I train them on how to pitch people one-on-one and be in compliance with the SEC, how to pitch for groups. So I get very excited about the joint venture agreement, the cracking the code for real estate funds. And then we do some calls like once a month. If members want to come in and call and ask me questions live, everybody listens. So just very basic. I kept it basic and very much into the actual results where we can have a symbiotic relationship to grow together.
I really appreciate that, and something also I was just reflecting at so many of my guests, and I'm so fortunate they come on and that same narrative where they just want to give back to people. So
that's great.
So it's really, really happy about that. Cherif, what's something that you're grateful for?
I'm grateful to have wonderful kids. I have two kids that are really, really wonderful. My daughter is turning 18. My son is going to be 17. He loves football and working out, etc. She's very much into working out, and they're very positive, enthusiastic, and they love real estate, which is so important because I don't want them to get into look, being a doctor, for example, is the most noble profession. But my sister is a doctor, and her husband is a doctor, and I see how hard they work. And my nephew is a cardiologist. Wonderful, the most noble profession you can think of. But come on, it's so hard to take the time off and all this. Me, I can make a decision in a few minutes. I'm going to have to make a decision. Do I go to San Francisco or not? Because we're going to have a couple of properties coming on the market. Maybe I do it tomorrow. It's not like, there's somebody in the hospital, I got to go right now, So that I'm very grateful for. And thank God I've had a lot of challenges, but somehow God gave me the energy and the positive mental attitude to conquer the obstacles and not be entangled in the physical world of problems, kind of not be inside the problems, to have the ability to step outside and look at it as if I'm advising a best friend. So I became my own best advisor. I'm able to help others grow as well.
I love that, like a higher vantage point. And by the way, when if your kids are ever, because my son, both of them, they also have the real estate bug. So it's always good. And they're also 16, 18 almost. It's, to be around. There's not a lot of people that are, hungry, young in the real estate space. So definitely we should connect on that. And what's something about you that people don't know?
That I'm a very religious guy. I think faith can help you conquer anything. Faith in yourself, faith in others, that there is more good than bad in life, and faith that everything at the end will work out well. If a buyer doesn't buy, it's to your advantage. If a seller doesn't come through, it's fine. If a renter is giving you a hard time, try to work it amicably. If not, if you have to sue, if you have to go through hell, that's with God's blessing. They put these bad people in your way so you can handle them so they don't hurt others. And with faith, you can move mountains.
Love that. I want to just tell you, I definitely ascribe to that. It's tremendous. When it's tough times, that's the thing that gets you through. But yes. I want to say this has really been tremendous. Thank you. And
thank you.
And how could people learn more about you and follow you on social media?
So they can go to www.CMREI, which is Cherif Medawar Real Estate Investing. C like Charlie, M like Mary, R like Robert, E like Edward, I like international.com. Or they can actually, and when they have any interest, they go to the website, they will see my programs, they see what I do. I have on YouTube 2,000 videos. 1,000 videos are success stories from people through the past 25 years I've been teaching people. And 1,000 videos are educational stuff that I hand over for free. And probably with this podcast that you're kind enough to have with me, and you will post it, people will learn, hopefully something will help them become more optimistic about life and what the potential is. So cmrei.com, they will get a lot of info. If they put my name, Cherif Medawar, on Google or something, they'll have, they can subscribe to YouTube. They could see social media. We have constant postings on Instagram. We film a lot, and I'm always doing new stuff. Every day there is some stuff coming up.
Well, thank you so much, Cherif. It's really been great. Really,
Moshe,
really
all the
appreciate
best to you and your family.
Thank you. Tremendous success, health, and happiness. Hope you enjoyed my conversation with Cherif. If you enjoyed this episode, please make sure to like, comment, and subscribe for more. Have a great day, and I'll talk to you again next week.